going on to the AMC stock family? In today's video, I just wanted to show you guys a quick little graphic organizer to really highlight and illuminate what could potentially happen to this one stock because we have a lot of hints going on right now. There are billions of dollars flowing in, there are millions of dollars flowing in, and not only that, we do have some serious hints coming around all over the place, especially from stocks like Tesla, especially from those who have decided to invest in Tesla because we are going to be understanding in just a few seconds. I'm going to show you the parallels between Tesla and AMC, and all this really does make a lot of sense. And so it's going to be very interesting to see whether all this decides to parallel or to conjugate in just a few days, because we do have the upcoming earnings date on November 1st of 2021. Now also, we just had the Tesla earnings date. That's why all this is so important. And for anyone that is fearful about the AMC price being down on the day, it is down 1.67 cents, almost 5% down. I know that's not the best number. However, I will also be showing you guys that this really is not a big deal. Now let's go ahead and talk about the graphic organizer. So these are the estimates, right? So in 2018, we were estimating around 0.05 EPS or earnings per share, and all the way in 2020 now, we are estimating about in quarter two negative 5.44 cents, right? So we do see this graph, it does decide to kind of fluctuate. However, it is kind of stagnant in this one box area. Then we decide to see this box area completely drop, and this is very significant because right now, AMC stock family, this has been absolutely phenomenal, right? Adam Aaron, he knows what he is doing. And it's not just Adam Aaron, it's actually because the economy is doing much better than it was doing in 2020. And so now that things are starting to get better and better, now we see that the earnings per share is paralleling with that, and we do see that conjugation, and it's all fruitioning because right now we are at 0.71 cents to the negative for the earnings per share. And you could already see the estimates going forward, right? We see that as time goes on, AMC will probably be projected to go about to that break-even earnings per share of 0.00, and as we see, it just keeps on getting lower and lower. So they're expecting in 2022, quarter four, they will have an earnings per share of 0.00, and that's really important because that means they will not be in that loss, right? That negative sentiment. And so also going off of that though, let's not talk about 2022. Let's talk about right now. So we have the date right here, November 1st of 2021. Now this website is saying it is on November 1st. However, a lot of other websites, they're saying November 2nd, and then other websites, they're saying November 11th. So we will just have to see a couple more days to see when AMC will decide to release their earnings. And not only that, the last earnings that we had, remember this date everyone, August 8th of 2021, because I'm going to be talking about it a lot more in depth, and you guys will see why right now the price really doesn't matter. And on top of that, we also have some more hints coming from the Tesla team, right? The Tesla share price and what happened with Tesla in relation to this day over here. Except for Tesla, it was a different day, but it's still the same concept because it all related back to the earnings date. So once again, Elon Musk proved that as long as you're running your company the way that you're happy with, nothing else will matter. And so therefore, you can block out the negativity from a lot of other investors. And so when they're expecting you to lose for the earnings per share, it doesn't matter, right? And that's what Tesla showed. And that's what all these hints are coming for. So let's go to the Tesla chart because I'm telling you guys, it was quite similar in my opinion. You guys will actually see it for yourselves. What AMC did last quarter with the earnings call was very similar to what Tesla did last quarter for the earnings call. And the reason why I'm not drawing parallels and connections right now for AMC is because the earnings hasn't come yet, right? We're going to have to wait just a few more days until the November timeframe. But regardless, let's go ahead and talk about the past. So in past history, take a look at this. So Tesla was very, very low, right? All the way to around $550 a share. And then as we get closer and closer to that earnings date, right? Because everything is trying to get priced in. And so that's when Tesla has that parabolic move to the upside. So Elon Musk and all those that were invested in Tesla, just basically everyone that was part of the Tesla community, they already had this in mind and they decided to just buy and hold. And what did the stock price do? And even it was also the day traders, not just the long-term investors. It was also the day traders because they understood that Tesla was probably going to beat earnings expectations yet again. But you see over here that it was priced in, but that's not important right now. What I'm trying to say is that as we get closer to this earnings date, it usually decides to go up in share price, or at least the equity decides to go up because many are expecting Tesla to beat earnings. And let me just tell you this, AMC doesn't have that sentiment just yet. But what actually happened the last time, right? This is again why I'm going to be talking about all these parallels, and this is why I believe that for those of you guys that are worrying about the AMC share price, take a look again. Ready? So August 8th, remember that date I told you from the previous website? That was the last time AMC had their earnings, right? So August 8th, that would be right around here, around this candle right here, this blue one. And so as soon as we took off from here, all the other candles, yes, it was a little bit fluctuating back and forth, back and forth. However, it took off soon after, very soon after. And where did we go from there? Guys, we went from $29 a share all the way to $52 a share. Let's not say $52 a share. Let's go all the way to this double resistance, right? Because if we're trying to understand this from a technical viewpoint, many people probably would have took profits if you were a day trader at around, what is this, $44.78 per share. Now, this is when AMC was trading on August 8th around $30 a share, and we went all the way up to $42 a share. Now, take a look at this also. Many people right now, they are looking at the minute by minute candle. Do not do that. That is only going to hurt yourself because you will have more fear, uncertainty, and doubt. So let's go ahead back to the weekly or daily candle. It really doesn't matter. As you guys just saw, the weekly candle really allows you to understand that, wait a minute, AMC, it's barely having a bad day, right? The only reason why I'm calling it a bad day is because over here, this website is really pointing out that AMC is red on the day. And so red is going to be paralleled with bad day, whereas green will be paralleled with good day. You guys already know the drill. And so if we go back to the daily time frame though, this is going to be the 1 year, 1 day, not the minute by minute whatsoever. So if we go over here, it also makes perfect sense that AMC is still stagnating. Stagnating is so much better than having frequent volatility, because if you have volatile candlesticks, that's actually going to be quite hurtful, right? You don't want to see AMC stock go like PayPal did today, although PayPal, just take a look at this chart. Ready? So PayPal is an amazing company as well. However, I just want to point out that this could definitely happen, and you guys do not want this to happen. I'm just pointing this out because we're not in this type of situation where we need to worry constantly on a day-to-day basis as to, is AMC going to drop like this, right? Going from all the way to $275 all the way to around $242 a share. Come on, everyone. And so now, real quick, we're going to hear what Jim Cramer had to say about AMC, because he is talking about a lot of the bearish investors. He's saying how there's a lot of manipulation. And in this case, I actually do agree with him. And the reason for that is because he talks about how there's so many bearish investors and they really have the ability to manipulate the markets. And he's saying that these bearish investors, they're extremely risky, and all they do is they create even more FUD to the market. And the bearish investors, they have nothing to lose.
The bears, they always get the benefit of the doubt. They just sound so much smarter than the bulls, don't they? And we always treat the bulls as lightweights. Drives me nuts how the bears are treated with such reverence, when for decades they've given the absolute worst advice, but they will almost never admit it. They know nothing. So on a day when the Dow gained 152 points, S&P advanced 0.37%, NASDAQ declined 0.05%, I think it's worth asking why so many people in this industry act like the bears are the only ones with gravitas, the only ones who really have something to say worth trusting. First off, it's easy to find super rich, super smart bears because they're naturally the most risk-averse group of investors. They've already made their money, so they have no need to take any risks. You only need to get rich once, right? Those bearish billionaires can afford to have total contempt for the stock market, probably where they made most of their money. And why the heck would they want to invest in something that could go down and down a lot, rather than parking their money in, say, municipal bonds? They are asymmetrical in their approach. The truly rich, and I mean the mega rich, tend to worry about only one threat, and that's inflation. Anything else they can live with, but inflation erodes the value of their billions of dollars. In particular, they're afraid of wage inflation because it means they have to pay people more. Someone making $15 an hour pre-pandemic might be making $30 now. That's actually the prices. I remember what it was like to live out of my car. An extra $15 an hour is life-changing. But from the perspective of business owners, those higher wages cut into their margins. The inflationists love to argue that the real victims here are people who work for a living, because so many of the goods they buy get more expensive. Oh, they're the victims. However, that's canceled out by higher wages. Call me crazy. I think a strong labor market is good for workers. The problem is the bears have the strategic ability to grab the mic by virtue of the fact that so many of them are super rich and therefore adulated by the media. And I think many of the wealthy, wittingly or unwittingly, are pulling up the ladder behind them by scaring you away from the stock market with horror stories about the dangers of inflation lurking everywhere. But it's more than that. They're also scaring you away from some of the best stocks in the market that really don't have anything to do with inflation at all. It's a group that I'm now calling TAN. That's right, TAN. Tesla, Amazon, and Netflix. Originally, I wanted to go with Ant, but that's also a huge fintech company in China with a stillborn stock. Seems President Xi thinks they're too powerful. I tossed around that, too, but that sounded too much like Nordic American Tanker, one of the great stock disasters of our time. Well, the CEO is endlessly hopeful that tanker rates will go up, so the company will be in clover instead of bilge. So, TAN it is. I picked Tesla, Amazon, and Netflix because while I don't consort with hedge funds typically, the few times they've reached out to me invariably involved these three stocks and how they were going to zero. And by the way, you know exactly who I'm talking about when I say that you told me it's going to zero, you losers. Now, regardless of how you feel about Tesla's strong numbers tonight, and they were, don't worry, people are going to say they're not. I've dealt with those clowns. Or Netflix's numbers last night, oh, those were weak too. You have price target raised by 10 firms. More on that later. Or even Amazon's report next week. It's obvious that none of these stocks went to zero. If anything, they did the opposite.